Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. Before we jump in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of ATHA Energy, a company that holds the largest cumulative land package in each of the Athabasca Basin and Thelon Basin when it comes to exploration, two of the world's most prominent basins for uranium discoveries. It's Troy Boisjoli. Welcome to the show.
Hey, great to be with you today. Thank you.
Yeah, happy to have you here. I want to get started with the current increased attention that's being paid to the uranium sector. We saw a hell of a year in 2023. The spot price of uranium at this point in time has broken $100. Still a very small sector, and we're not yet seeing quite that level of mainstream attention. Do you think that as the market continues to evolve, that we will eventually see institutional players enter the space in a big way? And what would that do for the sector?
Unquestionably, I think we will. You look back to the previous cycle, and there was major players participating in the uranium space. I think the fact that we don't see that right now is actually a sign that we're still very early, and we're still very early in the cycle. And I can tell you, we've at ATHA, the meetings we've had, the marketing we've been doing, the awareness campaigns we've had on, and the people we've been meeting, anyone that hasn't been uranium focused specifically over the last number of years, and resource focused funds are now starting to pay attention and building a thesis and taking positions. Some of the more generalists are just being introduced as we speak, and so in our view, it's still very early days, and that speaks to it.
Yeah, early innings for uranium. That's an interesting angle because there are those out there who are concerned that the easy money has been made, as we saw the spot price of uranium rise over the course of the last several years. What would you say to an investor who's maybe new to the party? Are they too late, or how long do you think this bull run has to go?
Maybe two parts to that in terms of timing right now. Are they too late? You look at some of the large names in the space are performing exceptionally well. You look at Cameco, you look at NextGen, both great companies, different type of companies. Major producer in the sector. The other one, NextGen, having the best uranium asset in the world that they're taking into production, have performed exceptionally well. But you go down cap of that. And you go to companies that are more focused on early stage exploration discovery, have not yet ran. And so that's a real opportunity. So, some of the high names have, and then the opportunity going down cap, probably up that exploration risk curve. But that's also where, you can see significant torque in those names. And that's our thesis at ATHA. And I know we'll get into it a bit, here later, but then the second part of that, in terms of the longevity of this cycle, I believe we're in a fundamental shift right now. There's a fundamental energy shift going on, and nuclear is part of that. Nuclear is a big part of that. The only way we're going to get to net zero global emissions targets is obviously being backstopped by nuclear. And what we're setting up right now is a pure demand story. I think in 2005, 2007, in that period, is more of a speculative driven story. And so it ran up and came back down quite quickly not quickly, over the course of a number of years. But what we're in right now is purely a demand driven story. There is not enough supply out there to meet the demand now and going forward in the nuclear space.
And so do you think we could see more of a protracted cycle this time around when we compare it with the last bull cycle for uranium, when the price went parabolic, then obviously collapsed due to the Fukushima disaster? There were some pretty unique characteristics that were taking place there, both the Fukushima disaster itself, the flooding of Cigar Lake mine, which at least played some role in the sudden rise in the price of uranium. Do you think we're in for kind of a longer, more protracted grind upwards this cycle?
100% I do. And again, it's because it isn't event driven. I think you nailed it with the last one. That part of that was obviously Cigar Lake flooding. I think that at that point in time, it would have represented around 10% of on the supply side of global uranium supply coming out of one operation. It floods. Obviously, concern, panic ensues, price runs significantly, and then settles back down. But when it settled down, it still settled at a very strong price in the uranium sector, right? And then that was truncated by Fukushima. But where we're at right now is they're just, you look at production forecasts, you look at demand forecasts, this is truly a supply-demand story, and there is not enough supply to meet the demand. And it's about as straightforward as you can get. There's layers to it and levels to it. You layer on the physical funds that didn't exist in the last cycle. You layer on, and there's certain nuances and complexities to it, but it's fundamentally a supply demand story, and that's why I believe that there is significant longevity to this. We just had 22 nations coming out of COP22 that committed to triple nuclear energy by 2050, and so it's a story that is strong, and it's a story that's actually getting stronger.
Yeah, very significant development. I just want to get your quick take on the news coming out of Kazatomprom and the Kazakhstan uranium supply. Potentially, they're going to miss production targets. They're saying due to a shortage of sulfuric acid for their ISR operations. Obviously, we don't know anything 100% yet, but Kazakhstan produces 40% approximately of the world's uranium supply. You just mentioned Cigar Lake was producing close to 10%. So, do you think what would be the result on the market if we saw Kazatomprom missing their production targets over the next couple of years?
It would clearly have an impact up. It would positively impact the uranium price, but we need to incent new production, and new production needs to come on regardless of whether Kazakhstan hits their production targets, their nameplate production targets, increases production 20%, or falls off by 10%. Regardless, the price, I believe there's significant asymmetry in the uranium price still, and that the price needs to move higher, and that we need to incentivize new production to come online. And that, we talk about incentive price targeting or incentive price to incent new production online. You look at a uranium cost curve, and the very right side of that cost curve is over $100. So you layer on capital intensity and capital requirements on top of that in order to have sustainable production come online at an incentive price. It still needs to be much higher than we're at today even. So, I think regardless of whether Kazakhstan does what they do or continues to have operational challenges, it's good either way.
Yeah, well, very well said. Uranium is a commodity that's pretty unique when it comes to figuring out the price, because a commodity like copper, like gold, like silver, etc., many other industrial metals, you can quickly and easily find the current price that commodity is trading at. With uranium, it's far more opaque, and people point to the spot market, but most of transactions occur on the long-term contracting market. A lot of these contracts have non-disclosure agreements attached to them, so you don't even know what was paid. How can your average retail investor in the space kind of wrap their head around the price of uranium, which price they should be paying attention to, and how that price could ultimately affect the equities?
Ultimately, it's kind of the tale of two cities for people that are moving forward in the uranium space and aren't producing. Typically, you would point to the spot price as what's guiding you. Obviously, the producers have contracts, and like you said, most of the production is under either short-term or longer-term contracts, and then they have floors and ceilings in those contracts, etc. They can be fairly complex, and then they take delivery and they see their realized price. And so, I think it's two different things. I think you can look at the spot price as the guidance as to where the industry is going and where the sector is going, and the fact that it's trending up significantly right now obviously speaks to the broader situation, and that we've had a period where there's been a decade and a half of underinvestment in the uranium space through the doldrums of the commodity market, and that's coming back in force right now. There's not enough projects out there to meet what is fundamentally, a systematic shortfall or a systemic shortfall on the supply side in the uranium story. So it sets up a very, very strong case, and I think you have to look at the spot price right now as an indicator of that.
And I would like to also get your thoughts on the potential banning of Russian uranium supply. I think this is another factor that, if it comes to pass, is more icing on the cake as opposed to an actual fundamental part of the supply-demand story. But it's not only Russian uranium supply, but conversion and enrichment, which they control a massive amount of. Here, I want to read a quote from an article on Bellona about the situation. It says, the Prohibiting Russian Uranium Imports Act, which was approved by a voice vote, would bar Russian uranium imports 90 days after enactment, while allowing a temporary waiver until January 2028. The bill needs to be passed by the Senate and then signed by President Joe Biden to become law, though the timeline for this remains unclear. How realistic do you think it is that this bill makes it all the way to its final stage? And what would the impact be in terms of, obviously, at that point, the U.S. would need more uranium from North America, I would imagine.
Yeah, it's gotten this far. I think there's a reasonable chance that it would move forward. I think there's support from it on both sides of the floor. I also think that there's been rumblings that Russia might front run it. And if it is passed, why wait till 2028? Russia might take action themselves prior to that. But what this is indicative of, in my view, is what we've been talking about for a while, and that's a bifurcated uranium market, and what is shaping up to be a bifurcated uranium market. So you look at demand by OECD nations, and it's about 69% of the global uranium demand comes from OECD nations. Only about 24% of the supply comes from those same nations. Okay, and what we're seeing certainly in Kazakhstan, Russian utility making direct investments into Kazakhstan. We're seeing China directly investing in Kazakhstan, which is the largest producing center globally. Obviously, geopolitical issues in Niger that are affecting some of the production coming out of Niger into the EU, and what I believe we're seeing is it's setting up to be a bifurcated market where that North American demand, then it's really good. That bifurcated market is a positive thing for Canada. It's a positive thing for Australia and OECD nations that actually have a history of producing uranium and can fill that void.
Well, on that note, I think we could pivot to discussing ATHA Energy specifically. So for those who are unfamiliar with the company, could you give us the 10,000-foot overview?
Yeah, 10,000-foot overview. We're an exploration and development company in the uranium space. We have the largest exploration portfolio in Canada, if not globally. We're across three of the best uranium jurisdictions, one being the Athabasca Basin, two being the Thelon Basin, and then the Central Mineral Belt in Labrador. We're a company that just started trading April of last year, of 2023, and we have a highly experienced team on both the capital market side and the technical side, and we built a company for this time in the market and this time in the uranium cycle. And to date, we have been able to execute on our objectives, and we have been able to do what we wanted to do to get us to where we're at right now. And I'm sure we'll discuss some of the acquisitions, et cetera, and the plans moving forward. But that's the overview. Yes.
Great. Well, yeah, you do have a very impressive land package encompassing all three of Canada's top uranium jurisdictions. Could you provide some more details on your properties and maybe a little color on the Thelon Basin? Because that's something that doesn't get discussed nearly as much as the Athabasca.
Yeah. So land position. When you look at, I guess, stepping back in December of this year, we looked at the acquisition of proposed acquisitions of 92 Energy and Latitude Uranium. Okay. When you look at our asset base now on a pro forma basis, 3.8 million acres in the Athabasca Basin, and every past producing, current producing, and emerging jurisdiction district around the Athabasca. The Thelon Basin, over 2.5 million acres of exploration property acquired there. That ties in very nicely with Latitude's flagship asset, which is Angulac, and that's a 43 million pound deposit that is just to the south of our land position in the Thelon. And hey, the Thelon Basin, it is an analogous basin to the Athabasca. In the Arano, Arano now obviously has a Kigavik project there. It's 127 million pounds, a feasibility stage project. There's another company working on strike of that has made a couple discoveries. The Thelon, in my mind, is directly analogous to the Athabasca Basin. The only difference is it's analogous to the basin circa 1970. Because there's been hardly any exploration done there. And so the upside and the potential to discover significant occurrences of uranium mineralization are really high. And as a function of that, we had the opportunity to take a dominant position in Q4 of last year, and that's what we did.
You've got a cash balance north of 65 million Canadian dollars that will fully fund exploration. Talk to us about how you plan to put that cash to work here in 2024 and potentially beyond as well.
Yeah, and just to contextualize that, that's on a pro forma basis when we combine all of the companies. And when we announced the proposed acquisitions, we also announced a capital raise where we ended up closing on $23.5 million, which importantly was supported by ATHA Energy and Mega Uranium, who supported the deal. And so with that backstop, that sets us up for 2024. We have the largest land position and the largest asset base in the uranium space, a very strong balance sheet to execute work on it, and a very accomplished and capable technical team to be able to get the work done. And so how we're going to be deploying capital this year and investing in our assets is proportional to the maturity. So when we look at Angulac, the Angulac deposit would be, on closing with LUR, will be ATHA's most mature asset. There's 43.3 million pounds there at a grade of 0.69%. Deposit remains open. It's a basement-hosted uranium deposit. I've spent the vast majority of my career, the better part of 20 years, building and expanding on basement-hosted uranium deposits. And, I see a significant amount of growth potential at Angulac. There was the maiden resource there, the first resource, was 14 million pounds. 1 year of drilling, they increased the size of that resource to 27 million pounds. Another year of drilling, 43 million pounds. And so what that sets up is a very steep resource growth curve. And I believe we're still in the heart of that resource growth curve. And so we're going to be investing at Angulac with the objective of growing that resource significantly. Another project that we have a post-discovery project on the eastern side of the Athabasca Basin, right on the edge of the basin. And that comes through 92 Energy. That's a GMZ project, the Gemini project, or the GMZ zone. We intend to invest in mature exploration or advanced exploration along that corridor as well. We also intend to continue to build an unparalleled pipeline of exploration targets through investing in our greenfields projects as well, in both the Athabasca Basin and the Thelon Basin. And then in addition to that, Jesse, we also have a 10% carried interest right up to a bankable feasibility study level in both NextGen Energy's exploration portfolio and a couple projects within ISO Energy's portfolio. So a significant amount of exploration exposure in 2024 through ATHA, through our asset base, through our cash balance, and through the execution that we plan for this year.
Excellent. Well, talk to us about the team behind ATHA Energy, maybe starting with yourself. You touched on your experience briefly there. Maybe you could give us some more background on your experience, as well as who some of the other key players in ATHA Energy are and how you plan to leverage their expertise.
Absolutely. So I'm a uranium geologist. I'm a geologist by background. directly out of school, I had the opportunity to work for Cameco. I worked across the Athabasca Basin into Australia, etc. From there, I had an opportunity to go over to their operations side, to the operations side with Cameco, where I was ultimately became the chief geologist at Eagle Point, which is one of their underground mines in the basin. From there, I moved over to ATHA Energy. At NextGen, I was a vice president of project development, operations, exploration, and community for a number of years, and had what was a fantastic opportunity to help contribute to a world-class uranium asset and the development of that asset. Our team is, has people that are a depth of experience in the basin, in uranium. Our vice president of exploration, Doug Adams, 20-year exploration geologist in the basin, has worked for Cameco, has worked for Orano, has worked for Denison, worked for 92 Energy through Axiom Group, and made the discovery of the GMZ zone. From there, on the capital market side, we have a team that is equally as experienced and skilled on the capital market side, and that's evidenced by the fact that, on listing last year in April of last year, had raised over $40 million in support of the large land position in the Athabasca. We continue to build on that, and we continue to build on those strengths. So you look at the structure of the company, you look at the who is positioned in terms of institutional participation and ownership in the company, insider ownership, the technical capabilities of the team, and our asset base. And my view is we're set up exceptionally well going into 2024.
Well, you touched on acquisitions, and maybe we'll get some more detail there, because you recently announced the acquisition of two companies, Latitude Uranium and 92 Energy. How did that deal come together? What assets did this acquisition bring, and how do you plan to leverage and capitalize on it?
So the deal itself, okay, so we coming out of the gate, we view ATHA as a growth platform in the uranium space, and that growth platform was coming. That growth was coming in three ways. It was coming through investing in, at that time, which was 3.4 million acres of exploration property in the Athabasca, which we did, and maturing those assets. It came through exposure to the carried interest, which I described earlier on NextGen's exploration portfolio and ISOs. But then we also had an opportunity to leverage the value that we have in the company and look at acquisitions. And in looking at acquisitions, the key criteria for us, for myself and for our team, was looking at assets that we could mature ourselves along an exploration risk curve. So we have a substantial opportunity, greenfields exploration opportunity. Moving to the right of that, we're looking for companies that had made discoveries, had pounds in the ground and or resources. And we're able to find that with both of these companies. So with Latitude, we described the Angulac project already, and Angulac deposit already, 43 million pounds. It's one of the highest grade resources outside of the Athabasca Basin at 0.69%. And the growth potential that we see there is significant. And so that one fits very nicely, fit the criteria perfectly. Advanced resource, sizable, scalable resource with upside potential. 92 Energy, we were following that one very closely and knew it intimately well from a technical perspective. Went to site, saw the core, direct, in my view, very analogous to the Rabbit Lake Corridor. The Rabbit Lake Corridor produced over 200 million pounds of uranium. The alteration, the structure, the mineralization, the geology, the rock types at Gemini, at GMZ, very analogous to Rabbit Lake. So again, pounds in the ground there, post-discovery corridor with what we viewed as significant upside. And so that was our criteria. Now, very like-minded people on both sides. Siobhan Lancaster, she is managing director of 92 Energy. We had conversations. She has a shared vision, shares the vision of ATHA, building a scalable, sizable, relevant exploration company built for this cycle, along with Phil Williams. Phil Williams and John Jentz on the Latitude side. Again, shared vision, shared outcome. It's not very often you see a three-way transaction, and you look at transactions and they're not easy to do, and it takes a very compelling reason and very strong alignment to get it done, and that's exactly what we had going into this thing, and that's what we have still.
Great. Well, I will put links in the description below to the ATHA Energy website as well as social media for those who want to learn more about the company. It's been an amazing conversation. Really appreciate you coming on, Troy, and sharing your knowledge about both the uranium sector and ATHA Energy.
Yeah, thanks. I enjoyed it. I appreciate you having me on. Thank you.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.